Happy Friday, everybody. It's Shayan with Integrity Home Mortgage, back with your weekly rates rundown for January 23rd, 2026. Can you believe that this was a short week? It sure didn't feel that way. And I'm not sure whose idea it was to schedule Fridays so far apart, but I'm going to need to speak to his manager. Let's start by taking a look at the numbers. Since last week, 10-year Treasury yields are higher by about 2 basis points to right around 4.25%. Meanwhile, mortgage rates are also up by about 4 basis points. We began the week light on data, but heavy on headlines. And I think Greenland showed up in those headlines more times than Greenland has shown up in headlines in all the rest of history combined. Bond markets started the week on much weaker footing as rhetoric and rumor had the global community sort of speculating on just what means the US might employ in pursuit of the largest block of ice on the planet. Clarifying comments, of course, soon emerged from the White House, including a speech by the president at the Davos conference, which allayed a lot of those worst case scenario concerns. So, in response, markets were able to stage a bit of a recovery rally as the week progressed. So, let's understand one thing, and that is people have been and will continue to argue about just how strategically important Greenland is from a national security perspective, but that's not really what this is about. That's at least that's not what financial markets are reacting to. Sure, this is about Greenland, but this is not just about Greenland. It really is about the potential impacts for overall U.S. European relations. As I've mentioned many times before in this forum, in the absence of hard data or known facts, markets will always assign some probability to the worst case scenario. The more potentially impactful that worst case scenario, the more it'll weigh on asset prices. So, needless to say, while it might feel like a stretch to say that US European relations will completely break down over the whole Greenland thing, the potential impact of that happening would be huge. So that's why, as tensions rise and fall, so do financial markets rise and fall. It's not about politics, it's not about witchcraft. It really ultimately is just about math. Let's turn to the data, speaking of math, uh, because we did get some important stuff this week, and it's like the last bit of important stuff we're going to get before the next week's Fed meeting. Q3 GDP came in at 4.4%. This indicates that overall economic growth has been pretty robust. But we're going to take that with a little bit of a grain of salt, given the fact that Q3 was a long time ago at this point. Core PCE, which you'll recall is the Fed's preferred measure of inflation, came in right in line with expectations at 2.8% year over year. So going into the Fed, the best data we have is painting a picture that is showing that growth continues to outpace inflation. Labor markets remain sluggish, but don't show signs of large scale job losses. And inflation is stable, but continues to run above the Fed's 2% target. And that's why financial markets are pricing in essentially 0% chance that the Fed will elect to act on interest rates this time around, meaning they're going back into pause mode. Futures markets indicate a significant probability of another rate cut in June or July after a new Fed chair is appointed. However, I would say that if current conditions hold, meaning decent growth, stable inflation, moderating job markets, then I think another Fed cut becomes hard to justify the closer we get to that time. My bottom line this week, while markets have been volatile, mortgage rates have been able to hold on to the improved range that we've been in since early September, and that's really good news. It's hard to imagine, from my perspective, a path to have interest rates improve significantly from here, barring some deterioration in the broader economy. So we're talking about like real recessionary signals. But we remain at or near multi year lows in interest rates right now, which is a great setup for a productive and prosperous spring selling season. Might seem odd to be thinking about spring when we're about to get a foot of snow dumped on us, but if you're not thinking about spring right now, then you are not going to have a good one. Um, be safe out there, folks. Stay hydrated. Take breaks when you're shoveling, and we will see you next time.